With interest rate cuts near certain, is the outlook for US small caps about to improve? Welcome to your US Market Insight. I'm David Pollard. Earlier this summer, the prospect of lower interest rates sparked talk of a broadening of the US market rally, which made US small caps, as measured by the Russell 2000, jump. Back then, analysts predicted now was the time for investors to pay attention to this previously unloved sector. But as you can see, the love didn't last, and the index is broadly where it was back in May. Well, for more on the outlook for small caps, I'm joined by Nathan Moser, Senior Portfolio Manager of the Impax Small Caps Fund. Welcome, Nathan. Many thanks for joining us today. Why do you think the sector had a false start this summer, and why is now any different?
Sure. Well, thanks for having me. Small caps, we've been waiting. And I think patient investors have really lost some patience as the group has underperformed for the better part of the last decade. And so earlier this summer, we saw inklings of a move higher. As the market debates what's going to happen with the US economy, that has led to some volatility. And so right now, the current debate in the market is whether the US will have a hard landing or a soft landing. I would advocate that small caps can actually perform quite well in either scenario, because if you look at their relative valuation versus large caps, they are so extreme today that the case can be made that small caps have actually priced in a hard landing or recession outcome. So while there may be some more volatility, this is a seasonally difficult period, September, October. We've got an election that's going to be uncertain. Once we get through these next few months, I think the move in small caps can be more durable.
So you're convinced, are you, that despite the fact that most of these firms that we're discussing are very closely tied to the US economy, that they aren't facing a headwind from the US economy?
Correct. And again, it's a function of valuation. Specifically, just to put some numbers on it, when we look at relative valuations of US small caps versus large caps, they are at generational lows. They haven't been this cheap relative to large since the peak of the tech bubble. And if you recall, following late 1999, small caps went on a 5-year run of outperformance of more than 80% versus their large cap counterparts. That's despite a recession, the tragic events of 9/11, and war in the Middle East. And so while history doesn't have to repeat, it may rhyme, at least that's my view.
The Fed is expected to cut rates. Will 25 or even 50 basis points make any real difference?
Great question. We're debating that in the market on a daily basis. Every economic data point is being put through that lens of whether 25 or 50 is the right move. I'm in the camp that thinks that the Fed should go 50 basis points. They are already very restrictive with respect to policy. Inflation is moderating. And we've really seen a downshift in the US economy over the last couple months with respect to employment. Last week's employment data, while generally okay, had meaningful revisions. A couple weeks prior, we had significant revisions to the last year. And so I think the case can be made that the Fed needs to be quite aggressive with an easing cycle to put some stimulus into the system. And remember, Fed policy works with a lag. And so any cuts that they do this fall and into next year will likely take at least 12 months to filter through into the economic system.
Well, in that period, as you mentioned, we have the November election. To what extent will the outcome of the election have a bearing on this space? And I'm thinking particularly between the two candidates. How will a Trump win impact the space more or differently to a Harris win?
I think it's hard to know right now. The race is incredibly tight. The polls that we see are about 50-50, so it's effectively a coin toss. Tonight, as you know, we have a debate here in the States. We'll see if that moves polls in the weeks and months ahead. With respect to policy, I would suspect that most investors are going to take a wait and see approach. Very hard to know who's going to be the president come January. It may even be more difficult to know what sort of makeup we'll have in Congress. Having divided government may be good for equity markets. The markets over time have preferred gridlock. And so with that expectation, I think the markets can fare well.
Tell us, if you will, a little bit more about your fund. How does it differ from the Russell 2000, which, as the number suggests, contains a huge range of companies in both sector and size.
Yeah, so the Impact small cap strategy is a concentrated strategy. We invest in very high quality companies and make sure that we are quite careful with the valuations that we're willing to pay for those businesses. Impax, as you may know, is a sustainable investment firm. So we're looking for companies that are going to benefit from the transition to a more sustainable economy. So these companies tend to provide services or solutions that will help clean the environment, companies that tend to treat their employers and society as a whole better. And so when you put that together, we really focus on risk-adjusted returns. The strategy has been around for 16 plus years, and over that period of time, we've provided our investors with very strong risk-adjusted returns.
Okay, Nathan Moser, Senior Portfolio Manager of the Impax Small Caps Fund. It's been great to hear your thoughts today. Many thanks for being with us. That is Market Insight. Don't forget you can watch more videos on Reuters.com.